Ladies and gentlemen, welcome back to the channel. I hope you had a fantastic weekend, and I hope you're ready for a price prediction video. Some of the most outrageous price predictions that you will see that sometimes come true. Yeah, let's go ahead and get into what I think is going to happen with AMC stock. I'm going to break down my thesis on exactly why that is. I am not going to be correct, nor am I going to be wrong. This is my thesis only. You come to your own thesis and let me know down below in the comment section. Never trade any of this information. Never trade based off of any of this information, because guessing on the stock market is what everyone does and nobody does correctly. It's never going to be exactly how you expect. That's why I like to give ranges and probabilities and statistics, because there's a couple things that we usually know as a definitive. Point in being, we're going to have a lot of buying pressure for AMC stock that starts off the trading week. That is a definitive. What is an undefinitive or an undefined is, what are the hedge funds going to do? What are the shorts going to do? Are they going to counteract that? Are they going to continue to buy massive put positions and short AMC to a significant degree that I can't tell you right now? Well, sure. So my price prediction for the beginning of the week could be different than the end, because we just don't know, and there's a lot of unquantifiable. So let's go ahead and get into all of this information that you still regardless need to know as an investor in AMC, as a trader waiting for the MOAS. Trust me, it's been a long journey, and if there was a time where that journey might be coming closer to an end, it certainly looks like right about now, because what we have happening this week is obviously the reverse split. Now, as we talked about in the last video, it's not a definitive if we're going to even get the reverse split this week. There has been a litigation filed against AMC that has actually made it to the Supreme Court that could block this, because 8 shareholders are not getting the settlement. And Rose Izzo is the shareholder that is leading this litigation. And she basically says that it is illegal to do a settlement for one party of the same stock. So, same company. Essentially, AMC and APE are the same company. So you can't give out a settlement to AMC holders and not APE holders, which does make a lot of sense to me. I'm obviously not a lawyer, but if I were to put on a lawyer's hat here and just think about this logically, that does make a lot of logical sense. So she makes the argument that after the reverse split, there's nothing they can do, but they should halt the reverse split to figure the situation out beforehand. So that is a possibility. Now, as we've seen what happened last time, that would probably give you a pretty bullish short-term reaction for AMC. That's obviously at this point not even what you want to see happen. The reverse split is going to go through eventually. Whether it's this week, as we expect, and there's probably an 85% chance it does go through this week. There's probably a 15% chance it gets halted again. So keep that in mind. Statistically speaking, we're probably going to get the reverse split. But there's a possibility that we do not and it gets halted. So keep that in mind. So that makes things a little interesting. We haven't had a reverse split in AMC yet. We don't know how that's going to affect the stock. Now, first thing that I want to say is AMC recently has been inversing the markets, like very substantially. Let's go ahead and put on the S&P 500. See, yeah, it's not gonna. I hate the comparison on Webull. It never works, right? But if you just look at the S&P, just look at the charts, take a mental picture of the S&P, basically falling straight down. Take a mental picture of AMC. What's happening over the past couple of trading days? Well, AMC stock is up very big from the lows that we've seen at $3.18. If this trend does continue, well, there's reason to believe the markets could be quite bad this week, towards the end of the week at least, and that could be a positive to AMC. And again, that's something we cannot quantify. We cannot put that into writing of how much buying pressure this could cause, but we know, buying pressure for AMC, selling pressure for the markets, but we can say, hey, there's a pretty good chance that this is actually going to play out as we expect. So there is that as well. And just keep that in the back of your minds, what we've seen recently with AMC inversing the markets, and put that into your predictions and calculations as well. Now, as I said in the beginning of this video, the option activity is very strong this week, but it's different than what we have seen in weeks prior. Because this week, your call open interest, the vast majority of it is not super far out the money. It's very close to the money. So the $4 call did expire in the money on Friday, and that's a big piece of what we're going to talk about on the put side. But you had 68,500 calls expire in the money. This likely means hedge funds still need to hedge out a lot for those $4 puts. The break even on these is around $4.38. So in theory, all of this hedging would have to happen before $4.38. Now it could be obviously not at 4.30. It could be like 4.20, 4.10, based on where AMC stock was at over the past 4 trading days. The stock was a lot lower. These calls were obviously a lot cheaper. They have went up in value since the stock has been going up in value. But if you look at the 450 call, you got 34,000 for open interest, 84,000 at the $5 strike, 20,000 at the 550, and at the $6 strike, you have 18,000 for open interest. So the beginning of the week, the options are going to be pretty important. Now, the higher AMC stock goes, the better heading into Thursday's reverse split. Because the higher we are, well, the higher the conversion price, or the price of AMC, is going to be after the conversion. Now, if we look at the put side as well, at the $4 put, you've seen, for last week. For last week, you had 204,000 puts at the $4 strike that did expire out the money during this tug-of-war battle in after hours with AMC stock on Friday, hitting a low of $3.96 after it just sold off pretty aggressively after the close of trading on Friday. You did close above $4 per share. So that likely means quite a bit of buying pressure heading into AMC stock right in the morning, coming tomorrow, as well as likely on Tuesday. As you guys do know, a lot of settlements take about 2 days in the land of options. Now, if AMC stock does make a move to the upside, you got 31,000 puts at the 450, and at the $5 you have 22,236. So there is a decent amount of potential buying pressure on the put side as well, and that's kind of exactly what I expect. I think there is a pretty good chance, rather than not, that AMC stock is actually pretty dang bullish once we start off this week. Why? Well, a lot of this has to do with the option activity, but if you are a hedge fund or an institutional investor that maybe doesn't want to take the risk of holding through the reverse split, that says, hey, I'll just realize whatever profits or losses I have now and call it a done deal with AMC. That's a possibility. That does lead to some buying pressure. Now, you're also having a lot of FTDs. So starting off the day coming tomorrow, you're going to have about 10 million FTDs. Then you go higher to about 12 million. So tomorrow being at 10 million, the day after being at about 12 million, that means net there's about 1.92 million FTDs that likely need to be closed out coming tomorrow. At least that's my perception of this. So that could be a decent amount of buying pressure on top of everything else. Now, if the markets are already weak, well, that could also be a problem. Now, futures will be opening pretty soon as well, so take a gander at those as you guys are watching this video, or whenever you guys watch the video, and check out and see what the futures are doing. I think AMC stock will probably continue to inverse the markets, just as what we've seen recently. Bonds and stocks have been falling, and AMC has been going higher. So this is like the double-edged sword effect. I talked about this like a year ago, where stocks, bonds, not doing well. A hedge fund that's short in AMC, well, if AMC is doing good on that day, well, that's like the double-edged sword. You're losing on your longs, you're losing on your short, you're losing everywhere. That's not the ideal situation to be in if you're a hedge fund or institution. And yeah, there's a lot of shorts in this stock right now. And really just at the highest level that they have been at, with increasing demand to short AMC, which I find the most strange thing out of all of this, honestly, is the fact that AMC stock dropped 35% and you got the reaction from after the courts. And what did people want to do? Short the stock still. That doesn't make a lot of sense. It's like chasing a short squeeze at the top, right? You're not supposed to chase a short squeeze at the top. But hedge funds, institutions are chasing the downside at the bottom. Doesn't make a whole lot of sense to me. AMC stock is still on the threshold securities list. 28.22% short interest off free float. 146 million shares that are currently sold short. Cost to borrow average 950%. Cost to borrow max 1,060%. Cost to borrow minimum 8.6%. I talked about this in the last video, but these cost to borrow fees are paid out every single day. So if you're looking at 1.06 thousand%, so 1,060%, your actual cost of borrow fees that you're paying every single day is almost 3%, about 2.8%. So if you just give it a month, I mean, you're losing 60-70% plus. 2 months, you're losing your ass. And we talked about this in the last video as well. I'll go ahead and pull it up. The average days out on loan is sitting around 131. So you're talking about a third of a year. You're looking at 3-4 months. These shorts are unprofitable in this trade. There's no reason to be in this trade, and I think they do start to come to that conclusion this week as we get closer to the actual reverse split. If they don't start closing out of short positions, then obviously after Thursday, after the reverse split, that's where I would expect to see more of that actually happening. Now, the option activity is definitely a big wild card as well. What we've seen recently, well, it's kind of strange. So in the past week, you had 1,014 orders bought from hedge funds and institutions worth $336.19 million with a positive order value of 4%. So keep in mind this positive order value. It was 4% for the last week. What you seen on Thursday was 122 orders totaling $77.02 million with a positive order value of 1%. Like basically nothing was positive. Well, on Friday, you've seen 112 orders totaling $46.05 million with a positive order value of 17%. So 17% is, 16 times better than Thursday's number? 17 times better than Thursday's number? So you did see a lot more bullish activity on Friday, but it's still been very negative. And these options create what I like to call synthetic shorts on AMC, and most of that has to do with market makers, right? If you go out and you buy puts and your puts go into the money and you start making money, who's losing money? Well, market makers, they take the back end of options about 90-95% of the time because there's not always going to be someone that is willing to sell options and take on that much risk that has enough capital to hedge out properly in the event they needed to, in the event that you were making money on your options. A lot of sellers of options don't have billions of dollars as a market maker to hedge that risk. So market makers take a lot of the back end of options. Now what happens when hedge funds, institutions start coming out and buying those close to the money puts and those puts start to make money? Well, market makers, they start to lose money. They have to go ahead and hedge out those positions by shorting more shares. They don't hedge puts by buying. They hedge puts by shorting. Now they hedge calls by buying. They hedge puts, again, by shorting. So when you're seeing all of this put activity that can be very fluid, just back and forth, a lot of these trades are not held overnight or held for multiple weeks or until expiration. It's a lot of instantaneous just hedging back and forth all day, every day from the market makers, and that's their literal job to do so. So if you do get continued bearish option flows, this is not going to have a positive effect on AMC. And we never know how positive or negative it could be. So another unquantifiable. Now, if we think about the events that are happening this week, obviously number one is NVIDIA earnings. That's going to be on Wednesday and after hours. That is your big catalyst for the markets this week. Now, you're going to have Fed Jerome Powell speaking at the Jackson Hole Economic Symposium. What happened last time is the markets fell about 20% within the preceding 2 months. So not a good precedent there, but NVIDIA earnings really has the power to crash the markets and create a lot of fear, guys. So that is important to go ahead and keep in mind. Most certainly. Now, let's take a look at the charts and kind of what I expect from AMC. Now, I think there is a pretty good chance, rather than not, the stock can rally back to the levels that it was at just, a week or two ago. Back to this $4.85 to $5.25 range. I think there is a better chance than not that actually happens. But to be a little bit more conservative, I would expect AMC could rally to about $4.50 per share before you get the reverse split. That would put AMC roughly at about $45 per share after the reverse split. If you rally to $5, that's going to put the stock at about $50 post reverse split. So I think when you think about it that way, you're probably not going to get all the way up to $5 per share or above $5 per share. But $4.50, that makes a lot of logical sense to me. That's where the 50-day moving average currently is at, let's see, $4.54 per share. So I think you come up to this, I think you test this as kind of resistance, and you kind of float and bob here throughout the week. Now, after the reverse split, these numbers are totally going to change, but it's going to be the same concept, right? It's just going to be on a different scale, but you're still going to have the same looking chart. It's just going to look like AMC stock was hundreds of dollars in the past. So it's going to just look a little bit different. So after the reverse split, that's where I think things could get very aggressive. That's where I think AMC stock could actually, hit $6, $7, $8, $9, $10. Some of that will start on Thursday and Friday, but a lot of it will actually be in the following week. That's going to be the week where hedge funds and institutions actually go ahead and start closing out of those short positions, at least in my personal opinion. So long story short, what do I expect? I expect to move close to about $4.50 per share. If you get above $5 per share, that would be absolutely great news. I don't think that's going to happen. I don't think that makes as much sense. I think after the reverse split on Thursday and Friday, that could be a lot more of a bullish event. Now, I don't really see downside from here, but if you do find downside, about $3.75 per share, that is the level to be watching. So I got a kid to attend to. Thank you in the comment section. Have a great rest of your day, and I will see you in the next one.